You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hi, Jim. Great to be back.
We're taking a look at precious metals. Prices are down, but demand is up. How is that working?
Well, it's pretty interesting, and it seems counterintuitive, but all this year we've seen the price of metals, gold and silver especially, have been soft or declining, and yet the volume continues to increase. We're going to set the largest number of American Silver Eagles sold since the beginning of the program in 1986 this year, probably around 39 million plus. They're going to run out by the first week of December, and they're not taking orders until the middle of January, and that's just one indicator. And Eric Sprott's group has written a couple of articles about the massive demand in India for silver, could be 25% of the global supply this year, in part because of the efforts by the Indian government to slow the influx of gold, and they put high premiums on gold. So the metals continue to have robust demand even with declining prices, and sooner or later something's got to give.
Also, many market experts are telling us the equity markets are so oversubscribed right now that sooner or later this bubble is going to burst. They say it won't be a major downturn, but we know anytime the markets go down, people look for some kind of security, and I think at that time we can also look for precious metals to increase in price.
That could very well be, and with the stock market, the general market being fairly high and overvalued by some metrics, people have price risk because they're paying quite a bit for something, and a lot of information's already in the market. With the metals market, we have information risk. The price is low, relatively speaking, and we don't have a lot of information. And once the market has that information, the price will be much different than it is today, and I believe substantially higher over time.
What about foreign markets right now? We've seen major projects all around the world canceled. The latest was Gabriel Resources of Canada's plan to build Europe's biggest open-pit gold mine in Transylvania, Romania. Now, by the way, my Romanian friends tell me Transylvania is beautiful. It's like touring the Canadian Rockies, and there are no sign of vampires. But I think Gabriel Resources might feel differently. They have a committee there has rejected their plans because they say they don't want cyanide used to process gold. Isn't that part of the gold process everywhere?
Well, not necessarily, but of course it has to do with the environment and the particular project that's taking place, and there are other ways to process gold. But if you look at the huge picture of the supply-demand situation, the supply is being attacked on all fronts, and some of these fronts are legitimate. There's some projects that probably shouldn't be built because of the sensitivity and the environment in that area, this type of a thing. But overall, there are many projects which probably could be built very safely and would be a boon to the local economy and would have a small imprint on the environment. But you have this mix of social consciousness and the attempts, for example, in Mexico, the most strident right now, of trying to tax the daylights out of any project that looks like it might be turning a profit. And all these things coming together with massive projects that have been put on hold this year that we've discussed in earlier views on the show here, all of this is causing a kind of an underground grinding down of the available supply, and this is going to be going forward over the next several years. And as this supply continues to grind down and it becomes more and more difficult and costly and complex to get an ounce of gold or silver out of the ground or a pound of copper or zinc, I think you're going to see a collision if the type of demand continues at its steady level. You're going to see a collision across the commodity complex, across the metals complex, and we've already started to see it more pronounced in the PGMs, platinum and palladium. And so this is going to throw a lot of these projections about how much is going to be out there up in the air. It's going to be pretty fascinating to see that effect on prices.
My guest is David Smith, senior analyst for the Morgan Report. David, you were mentioning huge disconnect between what you pay for mining shares, what people are asking for the price of gold and other precious metals, the securities that you might hold that may contain a bit of precious metal. What kind of strategy should we be using right now if we're going to be wise investors in precious metals?
Well, first of all, I think we have to align our beliefs with our behavior. And if people do not really believe that the bull market in gold and silver is going to continue, and they try to buy these stocks, they're going to become disheartened and sell out. They have to believe in the story, and if they don't, they probably shouldn't be involved in it, or they certainly shouldn't be adding to their positions. But if you have that connection, then that'll help you to be calm and not be fearful when others are in the market, and you can buy bargains, which we're seeing now. One of the things that I find very fascinating, and I noticed this morning quite pronounced just before we were talking, the metals prices themselves are on the soft side. Silver's down about 45 cents, gold's down about $8 or $9. And I noticed the mining stocks that I follow are begrudgingly giving up ground. So in other words, you might expect them to be down sharply on this, but they're not, and they're just down a few cents, most of them. And it's kind of what I would call the Hound of the Baskervilles moment, when in the Sherlock Holmes famous novel, where the dog didn't bark, and that was something that was unexpected. You would have expected the guard dog to bark. And so I'm going to be watching this because I think it is interesting. I've noticed this has been going on for the last few weeks. If this continues, it's very possible that as the bottom testing goes on with gold and silver, at some point the mining stocks will actually turn around and lead the way up, and the metal itself may follow rather than the opposite. So it is something that bears close attention as far as I'm concerned.
David, you expect that when metals prices do start to go up, we're going to see kind of a dramatic bump, maybe $100 an ounce for gold?
Well, this is a theory of mine, and I'm not saying it's going to happen tomorrow, and it may not happen at all, but I think it's very possible if the disconnect between the supply and the demand gets to be extreme enough, then at some point the market, like a rubber band being stretched out to a point that doesn't make sense, either has to snap or turn back around. And we've already got a 2 standard deviation extension of the mining stocks in relationship to the metals price itself being out of alignment, and so how far can you stretch that? And at some point, we could wake up with a seminal event which would change the rest of this bull market, where you could see a massive move up overnight as a way to relieve this pressure and tension, where gold could be up $60, $80, $100 an ounce, and silver could be up $5 overnight. You wake up the next morning, and the reasons for that wouldn't become apparent for a while, but it would be, I would guess that morning there would be an eerie calm over the market after that huge move where everybody said, now what next? And that would form a giant flagpole, and then you would see declining prices slowly for the next week or so, and then a resumption of the up move, and that would start the final process leading to a public mania blow-off a few years hence. So that may not happen, but you know what? I think it's very possible that it could. I don't know what the trigger would be, but I think the overall rationale would be that the market had gotten so disconnected between the price of the metals, the price of the shares, and the demand in the real world that it had to reorient itself in kind of a convulsive motion to turn that big ship around and get it going in the opposite direction.
One of the reasons that you might be bullish on silver is India is snapping up every hunk of silver they can find. And why is that?
It's really stunning, and the Sprott Group has written about this in the last few weeks. Their projection is that if silver consumption going into India continues through the end of this year as it has the first 3 quarters, that they could be consuming 25% of the global production of silver just in India alone. And the big reason for this is probably because of the restrictions that the Indian government has put on the importation of gold. They put very high premiums on bringing the gold in, which has knocked down the gold going in by 80 or 90% temporarily. And so the Indians probably are moving towards silver because the restrictions aren't as onerous for that. And so it just shows you where the desire is for the precious metals. And when you try to stop one source flowing in, it'll go to another. So this is going to be something that really bears watching. And I think ultimately the Indian government is going to have to recant on their gold prohibition and take these onerous taxes off of it. They're trying to protect their economy, and they're trying to protect the value of the rupee. But the reality is the people and the market, as David Morgan always says, the market is bigger and more knowledgeable than any of us that are participating in it. And Mr. Market will have the final say on this. I can guarantee you that.
And, of course, the people of India traditionally have always been hot on gold and silver, going back 10,000 years.
They have, and with what they've seen, for example, I'm not sure it's the same today, but it was within the last couple of weeks, that gold had reached an all-time high in rupees denomination. So in other words, people that had bought gold, let's say 6 months or a year ago in India, they now have all-time high profits on that gold that they made, paper profits, based upon the degradation of their currency in relationship to the metal's price that they got even a few months ago. So that just proves what happens when your currency degrades in relationship to its ability to purchase the metal. That's when you're a big winner, and that's what's happening to the Indians that had the foresight to buy their gold ahead of time.
And I don't know how effective the Indian government's policy on gold is. Recent statistics show that gold now is the most smuggled product into India, beating drugs.
I have no doubt that the amount of gold going into India under the radar, so to speak, is many, many times more than you would expect. But based upon human behavior, it is expected.
Are they going to check the fillings in your teeth?
Could be. We'll just have to see.
Because I can imagine people going and returning with a mouthful of gold. You're not going to rip my teeth out, are you?
Well, someday they may decide to come up with something else where they could take the gold out and monetize it and put in something that works equally well in your mouth. And then I guess we'll know that the public mania has really arrived when people start, the live people anyway, start taking gold out of their mouth to sell it and putting something else in. That will be probably the top for the gold market.
David, always fascinating to talk to you. Thanks for being
here. Same here, Jim. It's been great talking with you today.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HoweStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HoweStreet.com. I'm Jim Goddard.